The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, 8:30 a.m., 60 minutes to go until that opening bell. And we got a mixed market to start things off after quite a volatile day yesterday. Right now, you're looking at the S&Ps basically flat. We'll call it positive by 3 points right now at 33.54. NASDAQ futures positive by 50 points. That's almost 0.5% in the green, trading 11,125. We get the Dow negative by 30 points. That's 0.1% in the red, 27,790. The Russell flat right now at 1536. Crude oil, quite an acceleration this week to the upside on crude. We make a high overnight of 41.72. And since about 4 in the morning, call it 3 in the morning, that high, we've sold off about $1 in crude. Right now, we're off 43 cents technically on the session. Crude trading at $40.78. Gold contract, little negative action in the last couple hours as well. Gold technically up $4 on the session at $19.54, but we were as high as about $19.64 at about 5 in the morning. So the last three and a half hours, a little bit of a sell-off. Silver down 1 penny at $27.08. We'll jump to notes and bonds. A little bit of higher price and lower yield. The 10-year up 3 ticks right now at 139.17. The 30-year up 9 ticks at 176.24. The 10-year yield 0.672% to be exact. Jumping over to Europe, we have the DAX up about 0.2% so far. FTSE negative 0.4%. CAC roll negative 4 as well. Over in Asia, you had Nikkei up 0.2%. Shanghai up more than 2% overnight, and the HSI up about 0.5%. All right, let's jump over to the VIX this morning. Quite a day yesterday. We saw the VIX almost reaching 29. We pull back a bit today. We're still sitting at about a 26 handle, 26.23 currently on that VIX. And what else we got going on, folks? It is quad witching. So an event, we're talking about futures, we're talking about equities, we're talking about the end of the month, the end of the week, the end of the quarter. We'll see if that provides some volatility. We've had enough volatility as is, but it is quad witching Friday. Interesting on the heels of what we had going on yesterday in the markets in terms of the volatility. Taking a look at the S&Ps. For some context, so quite an acceleration to the downside. You back it up to Wednesday. We're sitting at 34.19 as of 2:30 p.m. Eastern time exactly. Right when Chairman Powell began his press conference, you trade from 34.19 and down 110 points, down to lows overnight about 2:30 in the morning. And we hit that level on a few occasions yesterday. 33.20 was the lower bound entry, whether it was 9:30 in the morning we were there. We were back down to that level at about 12:30. We were back down at that level at 3 p.m. Eastern time as well. We closed with some strength. You trade from right at 3 o'clock yesterday, we're trading at 33.18. You make it up to a high at about 4 o'clock of 33.54. That's 40 S&P points. Nothing to shake your head at. Quite a pop, and we're sitting kind of right at that level right now. We got 1 hour to go until the opening bell. We'll see where we shake out from there. All right, what else we got going on? The Oracle saga continues. So the Commerce Department out there saying that as of Sunday, you will not be able to download TikTok, period. End of story. Trump administration blocking U.S. downloads of TikTok and WeChat on Sunday. This news kind of just hitting the wire. Commerce Department announcing Friday morning that it would ban the U.S. business transactions with Chinese-owned social media apps, WeChat and TikTok. And what's interesting here is that this announcement comes ahead of an expected statement. Now, Oracle's trading a little bit lower on this news. We'll jump over to their chart in a moment. Ahead of an expected statement due today by President Trump on whether or not the government will approve a deal for Oracle to take a minority stake in TikTok. Pretty interesting that you have the Commerce Department coming out and saying, as of Sunday, you're not going to be able to download WeChat or TikTok anymore. And that's ahead of a statement by President Trump on whether he's going to approve a deal of Oracle to take a minority stake in TikTok, which was supposed to basically allow TikTok to continue operating and become a quote-unquote trusted technology partner for the company in the U.S. And as they say here, it's unclear, excuse me, if the Commerce Department's announcement means there's no possibility of the deal going through before the Sunday deadline, or it could be an aggressive move from the Trump administration to push for its original intention for TikTok to be fully owned by a U.S. company. So interesting stuff. We'll see how it plays out. We'll jump over to Oracle shares this morning, as you may expect on that news. Oracle ticking down a bit. We closed yesterday at 60.18. Pretty muted reaction. We're down almost 1% at 59.65 so far this morning on Oracle. Some of the other players that were involved in that, not like they're trading off it this morning. You see in the NASDAQ 100 now up about 60 points. Microsoft was in the mix originally. Microsoft up to about 204 from 202. Quite a charge higher for these tech stocks on the open yesterday, right? You had Microsoft go from about 200 to 204 in a heartbeat. And just like that, you were back to 200 in the middle of the day this morning. We're opening right back up at that 204 price level. We'll see if we can hold that level. You did have Walmart in the mix as well. Walmart, a little bit of a sell-off this morning from 138. We're trading at about 136.20 so far today. What else we got going on? Jumping around to stocks making moves. So Home Depot and Lowe's, Oppenheimer, downgrading both of them from outperform to just perform. Lower the price targets on the two stocks, noting that near term we're increasingly concerned that the market's becoming too lax toward chances of a post-COVID-19 sales growth downshift at HD and Lowe's and the potential impact on shares. Those both, as you may expect, on a downgrade, down a bit. But guess what? Not quite. Home Depot from 279.76. We're trading basically flat call. I mean, this is right where we were yesterday as of 3:30 in the afternoon. 278.90 on Home Depot. Low shares, whoops. Trading a little bit lower from 163.78 to 162.43. But folks, just for some context on these two companies, my goodness, talk about a rocket ship from $60 to 160. You could just argue that it's got to pause for a little bit in terms of the growth that is already factored into these equities. Rocket ship indeed. Pre-COVID, you were trading at about 125. You get cut in half to 60, and then you get tripled to almost 180 on Lowe's. Pretty similar action on Home Depot. You were trading at 240, you trade down to 140, and we're just sitting right at this upper bound of where we've been at since about the middle of August, call it like the last 5 weeks or so in Home Depot. It's that housing market, just a rocket ship in a big way. Jumping around to some of the other housing stocks since we're on it. Lennar, they had their earnings this week. Pretty decent earnings, but you saw some volatility. Same deal, just kind of hanging around where we've been for about the last, since the middle of August or so. KB Homes, similar action as well, back to where we were pre-COVID, on those levels as well. And you got to take a look at this note and bond market, folks, because interest rates, as Chairman Powell said, they're staying near zero. They're staying near zero for about 3 years at least. And remarkable when you consider what the market has done, right? 139.22 seems to be where the 10-year is comfortable at. I put this bar on this chart, right? Pretty interesting. When I put this bar on this chart, you can tell when I put it on this chart because I put it on this chart and it stops going. Now I could extend it to the right, but I kind of keep it here because it's interesting because it reminds me of when I put it there, which was July 16th. Well, folks, we're more than 2 months after that, and we're within 5 ticks of where that 10-year was at on July 16th, trading at 139.17, and we got a 10-year yield at 0.67%. Stay tuned, folks. We'll be back in 3 minutes, see what else we have on tap for Friday trading. I'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the markets ticking up a bit. S&P's now positive by 5. We're about 45 minutes to go until that opening bell. We get the NASDAQ up 57, the Dow off just about 20, and the Russell sitting flat. Jumping over to gold. Gold up about $7.50 right now, putting it on a daily chart. Quite the acceleration. Gold kind of been chopping around in this area since August 11th. We're talking about 5 weeks, folks, that we've been bouncing. Call it between a lower bound range of about 1920, upper bound range maybe about 1980 to 2000, right in the middle of that area after quite an acceleration from July 20th to August 7th. You traded from $1,800 to $2,100, let alone the COVID lows, we'll call it, to $1,475 on that gold contract. I bring up gold because UBS, they are very bullish on gold. Says prices could stay high longer. Gold prices could rise even further and remain high for longer than expected as global uncertainties persist, said their head of Asian global markets at Swiss banking giant UBS. Spot gold trading around $1,950 on Friday, 28.5% higher than where it started the year. Said the bank has raised its gold price forecast for the next year from $1,850 to $2,100 per an ounce. We're very bullish on gold. We think the prices will go higher, and what's interesting is we think it will stay higher for longer than expected. They raised it to $2,100. An environment of negative real interest rates and global uncertainties, such as the upcoming U.S. presidential election, are among reasons that have pushed investors to build up their holdings of gold, they said. So recently, we have a retracement in the equity market. What's interesting is that the gold was very resilient despite the equities pullback, suggesting that there's ongoing buying support. On top of that, gold is also a very attractive portfolio diversifier. Now, the one thing I'll say, folks, and Tom said it as well many times, when the market really sells off, they sell everything, folks. And we saw it kind of as COVID kind of hit things. But I'll plug it right here. The Gold Report. Check it out, folks. Tom O'Brien, my dad. New issue every Monday. Great time to check it out. You get a 30-day money-back guarantee when you check that out. He's got some great trades in there recently. But, yeah, I mean, you back things up, right? Gold's sold from $1,700 to $1,450 initially on the COVID collapse. But guess what, folks? In the span of 3 days, you go from March 20th at $1,450 and you got all of your losses back by March 24th in gold. You had to stagnate for a while, all the way till June 15th. Then things really rocketed higher. Gold building a base at about 1958 right now on that gold contract. All right, what else we got going on in terms of equities making moves this morning? Ambarella. So you got the semiconductor design company. They got an initiation of an analyst rating from Berenberg with a buy rating, price target of $67. That's almost 30% above these semiconductor microchip stocks, folks. I believe it's AMBA, right? Yes, AMBA. So there's their chart, but you're going to see a little bit of a pop today on that 5301. Now I'm going to use this opportunity to jump around to some of the tech stocks, folks, because Nvidia shares back above 500 to 505. The daily charts of some of these stocks, my goodness, right? From 200 to 600, almost sitting just above 500 today on Nvidia. I just bought myself a new desktop computer. Got to get the home studio all hooked up. Got myself a nice new Nvidia graphics card in there to make sure I can handle all the cameras, all the charts, all the everything going on in my studio. Quite a rocket ship as the world works from home, and computers, they are running the show, folks. Dave & Buster's jumping around a bit, so they get an upgrade. Surprising here, surprising to say the least. We'll pull up their stock first. So check this out. Now this is, we're in the gambling business, folks. If you're a trader, you're in the gambling business. Doesn't mean you can't have a positive expectation when you're gambling, but you trade from 14.12. We're up almost 10% right now on Dave & Buster's, up to 15.47. Now keep in mind that several analysts upgraded the stock even after the company reportedly warned about a potential bankruptcy if a deal with its lenders is not reached. Now listen, you can make risk-reward propositions, right, that might be a long-term, as in over the long haul. You run this scenario a million times, maybe you make money, okay? But when you're buying a stock that is telling the world that they might go bankrupt if a deal's not reached with the lenders, you just better be careful and understand the risks that go with that type of an investment. Two of the firms upgrading Dave & Buster's. In a note, they said the recent pullback in the stock creates an attractive entry point for investors with higher levels of risk tolerance. I mean, there you go, right? It's a high-risk reward trade probably where they believe that it has a positive expectation in the long run. But boy, if you better have a high level of risk tolerance if you're buying an equity that's literally telling the world that if they don't make a deal with their creditors, they might go BK. And Dave & Buster's, look, they got a long way to go. Just the business of that stock in its entirety, it's built around, I mean, look at where we are in this equity, right? Even today, you're just trading at $15. You're basically at this base that's been building between 10 and 15 since the collapse. Yeah, you made it to a low of 461, but there's been barely any strength in this stock at all. They just came out with their numbers last week, I believe. Yeah, and the stock was trading at almost $18 at that time. So you're still down dramatically from there. You saw the drop off when they told the world that they might go BK, putting this back. There's your drop off there. We were just trading at $19 on Wednesday. So yeah, maybe they're saying, listen, at $14, it might be a nice risk-reward trade, but still a very, very real possibility that we go BK in a company that's not even just a restaurant. You're running around, you're playing games, you're touching all the machines. That is a long time. It's basically a post-COVID world that they're going to need to be back in business. You can't be social distancing when you're running around to all the different machines, touching them, playing with them, etc. So buyer beware, to say the least, on that equity. Beyond Meat, this one's an interesting one. They get a downgrade as well to underweight from neutral. That stock is down. And quote unquote, JP Morgan, the stock is ahead of itself, and we view street estimates as too high thanks to chief rival Impossible Foods taking share at grocery and restaurants, hesitating to add menu complexity during the COVID-19 crisis. So Beyond Meat. Now, this is one of the real high flyers in the early days. So there you see it from 157 to 149. We'll put it on a daily. Actually, I'm going to back it up more than that, a 3-year weekly, yeah. If we remember the stock going from 45 to 239, folks, Tom and I talked about it on the air a ton. It was coming to valuations that were just so out of whack. I mean, you're talking about a company that has tens of billions of dollars. Meanwhile, you're going to be competing with some of the biggest food processors in the world, let alone Beyond Meat and Impossible. You're going to have Tyson Foods coming out with their own brand of plant-based, et cetera, right? So be wary of these companies as well, folks, because you're trading at 150 right now. There is 150 on that chart. And as you see, anytime it's been climbing above this 150, we have had some real pain come from there, trading down to some negative action across the board. All right, S&P's right now positive by about 7 points, trading at 33.58. There's your weekly. Talk about a weekly, putting it on the 15-minute. Seeing a little bit of an acceleration to the upside. I say acceleration, ticking up, and we're right basically at any of these highs that we've had. The high yesterday, to keep in mind that we made it to 33.65. You get that market sitting at about 33.58 right now. We'll jump over the VIX as we wrap up this segment. The VIX pulling back again. We might get a 25 handle again. Got a 25 handle in the 7:30 a.m. hour, and we're sitting right at about 26 on Quad Witching Friday. Stay tuned, folks. Come back from the break in 3 minutes. See what else we have on tap for Friday trading as we wrap up the program. I'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got about 35 minutes to go until that opening bell. S&P sitting at about 33.57, jumping over to the mortgage market. Government mortgage bailout numbers improve slowly as they can be, pretty much. The number of mortgages in active forbearance programs where borrowers delay their monthly payments for at least 3 months declined by 26,000. last week, or less than 1%. As of September 15th, just under 3.7 million homeowners remain in these plans, representing 7% of all active mortgages. Together, these loans represent almost $800 billion in unpaid principal. Remarkable numbers, folks, when you consider this and when all this comes to roost in terms of that number. Now, hopefully they can figure out something. Maybe it gets pushed back in the mortgage because people just aren't going to be able to pay this back immediately, right? Maybe it gets pushed back towards the back end of the mortgage. How does that play out? What happens to the lenders? But all of this is going to come to roost. Only 26,000. You're dealing with a number of 3.7 million, almost 7% of all active mortgages. Remarkable numbers. The number of forbearance plans are now down more than 22% from the peak that was 4.7, but we just saw we're at 3.7 and we only dropped by 26,000. All right, we'll end the program, folks. We're coming into the weekend. I encourage you, we're in Florida. We're still dealing with some harsh numbers of COVID. Social distance, wear a mask if you can. We're going to have bars opening up. The story out there yesterday, it's a bummer. We were going to have the U.S. Postal Service shipping 5 masks to every single residents in the country. And unfortunately, one of the biggest shames of this is masks have become political, and the White House canceled that plan to send out masks. And as we approach 200,000 deaths, wear a mask, social distance. We're going to have bars opening up in Florida. We got positivity of 5%. We got 3,000 cases a day, and we're approaching about 125 Floridians alone dying every single day from this virus. So wear a mask if you can, social distance if you can, and let's help get over this thing so we can get this economy back to work and rocking and rolling as we like it. All right, folks, stay tuned. We got a treat. We got our man Steve Rhodes. He's filling in for Larry live next hour, coming up at 9 o'clock. We'll be right back with Steve, folks. Stay tuned.